So a big question is, what's the difference between conventional and FHA, and should I get a conventional or should I get an FHA? Basically, the answer is there is no set answer. Not one is not better than the other. I kind of want you to think about it like, what's a perfect fit? So a t-shirt or a polo shirt or a long sleeve shirt, there's no right answer. It all depends on the occasion, right? Same exact thing for a loan program. Depending on what your situation is what is going to be the best option for you. So a conventional does have an option as little as a 3% down payment if you qualify for it. It has that option. The mortgage insurance is a private company that works with banks, and they give the mortgage insurance, which basically protects the bank, saying lend this person the money, and if they don't pay, don't worry, they'll still owe the money, but we'll pay you back through the insurance. But you're gonna, as the borrower, have to pay that mortgage insurance no matter what. The good thing about a conventional is that once you bring down the balance of your mortgage to 80% or less of whatever the current value of your home at whatever time frame you're during your home ownership, you can call the bank and say, hey, I think I owe 80% or less of the value of my home. Do an analysis so we can remove this mortgage insurance. So that is $100, $200, $300, depending on the size of your loan and what you ended up qualifying for. They'll remove that off your monthly payment, and boom, you get instant savings once you meet that mark. If at the time of buying a property, you're giving 20% down right off the bat, then automatically you won't have mortgage insurance if you have a conventional loan. But conventional loans are more strict. So they require a 620 credit score, they require less debt versus income, and they don't allow certain collections. They're a lot more strict in the guidelines. FHA, their mortgage insurance is backed by the government essentially, which is HUD. And because of that, they're a little bit more lenient. They allow you to have more debt. They have a 3.5% down payment option. And they allow you to have a couple collections as long as it doesn't pass over $2,000. Anything that's a charge-off, which is a different type of collection, they don't even consider it a collection. So if you have a big $8,000 charge-off, it's affecting your credit score, but they're not going to make you pay that off, whereas a conventional loan, they will. And they allow a seller, if they want to contribute towards your closing costs, to give a bigger percentage. Conventional, at a minimum down payment, won't let the seller give you more than 3%. On an FHA, they'll allow the seller to give up to 6%. So they both have pros and cons. One of the cons for FHA is that mortgage insurance is in there for life for as long as you have the FHA. Is that necessarily a bad thing? Again, it all depends. If you have a charge off and that was your only option, it's not necessarily a bad thing. If the interest rate was significantly lower, the payment can still essentially be the same on a conventional. It may not necessarily be such a huge deal that you have mortgage insurance on there. So you really got to compare. It depends on the occasion and the situation. And your situation really is dependent on where you are today. So a pre-approval is going to be able to dictate where you are and what's best for you.